This is the complete trading education, and here are the top Forex trades for the week.
So the first Forex pair I'm going to analyze today is the US dollar Canadian dollar. Let's first look at the monthly chart to get a bigger picture. As you can see, price made a high here in January 2016, just below the 1.5 round number, and since then it's just been heading down. If price does decide to continue heading down, then the next area of support will be this area here, which is from the 2007 low. There will be areas of support in the way, such as the 1.2 round number, 1.1, and also the figure 1 in the way. But if price does manage to get through these round numbers, then this will be the next major area of support. If we look at the weekly chart now, on the weekly chart, price is currently above the 200 movement average, so based on that we want to look for buying opportunities. However, the trend filter is red, so we're having conflicting information here, so we want to actually stand aside. Ideally, if the bars are red, we want to also be below the 200 movement average, and if the bars are green, we want to be above the 200 movement average. So now that we've got conflict information, we know to just stand aside. But just before we leave this chart, I want to draw a support here. So we have this strong area of support from April of 2016, and that area of support is also near the 200 moving average. So we have a strong area of support here. So ideally, if you want to go short on the US dollar Canadian dollar, then you want to do it when price actually breaks and closes below this point here. So let's look at the daily chart now. On the daily chart, price is currently below the 200 moving average, and we have a red trend filter indicating that we can go short. However, because we are still above the weekly 200 moving average, we do not want to do anything for the meantime. So this was the area of support I mentioned on the weekly chart. So some traders, some short-term traders might have shorted this forex pair around this point here, but there isn't much pips here on the table to make profit. I rather wait for an opportunity where I can accumulate a lot of pips. So this might be a few hundred pips to gain profit. So it wouldn't be worth my risk because of that strong area of support. Price may come down here then bounce back up. So I'd rather wait for a clear opportunity. And what I mean by that, if we go back to the weekly chart, on the daily chart, you can make a small profit from around about here to here. I'd prefer to wait for a break and close below this area here. Then we have all this area to maneuver. So we have a lot more pips on offer if we actually just be patient for a little bit and then wait for a break and close here. But short-term traders might try to just make a few pips here and then make a few again. But I'd rather wait for a clear opportunity and then make a huge profit based on a huge move if price does decide to make a huge move from this point here down to this area of support. So the next forex pair I'm looking at is the Australian dollar US dollar. If we look at the monthly chart, you can see that since 2011 price has been in a downtrend. Now although price has currently been moving up, this could just be a larger degree pullback before a continuation to the downside. So at the moment we are in a bear trend on this forex pair. If we look at the weekly chart shows that price is currently below the 200 movement average. However, the trend filter is green. So we ideally, if we want to go short below the 200 movement average, we want the bars to be red, indicating that we can short this forex pair. But at the moment it's green, and as you can also see, price is actually in consolidation. So we have, this is the area of support for the consolidation, and this is the area of resistance for the consolidation. So as you can see, price has poked its head up above this resistance area, hit the 200 moving average. So if we don't see price continue higher, then price will just end up coming back down into this zone. It's very hard to trade consolidation because you never know which direction it's going to move in. But at the moment, as we're getting in conflict information, we want to just stand aside. So what we want to see is either price continue down and go below this area of support, then I can start shorting this, or price to actually hold above this area of resistance and break above the 200 moving average, then we can start looking for long opportunities. look at the daily chart quickly. On the daily chart, as you can see, we haven't got a clear trend. Price has just been going up and down, up, down, up, down. Price is above the 200 moving average, and the trend filter is green. But because we haven't conflicting information on the weekly chart, it's best to just stand aside until we have a clear direction in play. The next forex pair we're looking at is the US dollar Japanese yen. If we look at the monthly chart, we see that price was heading up from 2011 up until 2015. Since then, it's headed down. We had this deep pullback, and we're seeing a continuation to the downside. Look at the weekly chart. Price is currently below the 200 moving average, and the trend filter is red, indicating that we should only be looking for shorting opportunities. So if price does decide to continue lower, then this is an area of support which I need to be broken before actually considering shorting this. If we look at the daily chart now, price is currently also below the 200 moving average, and the trend filter is red. So we have trend filter red on the weekly and daily, and below the 200 on the weekly and daily. So here we just need this area of support to be broken. Once price can break and close below here, then we have all this space to maneuver before this area of support. So if price does decide to break through here, then we can potentially trade this down here. So just be patient for the meantime. There isn't much pips on the offer, so I wouldn't bother trying to trade this just yet. I'll just wait for a break and close below here, then start shorting this forex pair. And the last one I'm looking at is US dollar Turkish lira. Now on the monthly chart, we can clearly see that this is heading in an upwards direction. We have pullbacks along the way, but overall we are heading in the upwards direction. Currently we are experiencing a pullback. Let's look at the weekly chart. Price is currently above the 200 moving average. The trend filter was green, however this week has turned red, so we want this to turn back to green so we can be confident that we can trade this in a long position. If we look at the daily chart showing we are currently below the 200 moving average, and the bars are red, so already conflicting information. Because we're above on the weekly and below on the daily, we want them both to be aligned. So we want, go back to the weekly chart, we want the weekly to actually be below this 200 moving average. There are times when you can actually trade them even though they're giving you conflicting information, but to be on the safe side, to make trading simple, wait for both of them to be aligned. Now if I was to look for any shorting opportunity, I would at least wait for a break and close below this area of support. So once this area is broken, then I can start looking for shorting opportunities. But at the moment, to be on the safe side, stand aside and look for better opportunities elsewhere.